Should we buy or sell the Philippines stock market ETF? So first off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So we go to South Asia, Philippines. The stock market ETF is 32% from the 52-week low and 12% away here from the highs. We start here with the weekly data points. Something that it is pretty interesting with this ETF is that we have very clear time cycle behavior, but the challenge is that the time cycle have shifted in duration. But this is definitively one of those buy low, sell high ETFs, very much dominated by time cycles. So if we zoom in a bit here, you do see that we have had a pretty strong rally. So let me draw it in. And we have also seen the inverse head and shoulders pattern play itself out. A very small right shoulder here. Then we go off to the races. And that is a very key thing about these chart patterns, is that when they are expected, like in this case, inverse head and shoulder, then the right shoulder can form very quickly. So in this case, you didn't have the time to dilly-dally, and off to the races we went. Yeah, looking at the daily data points, very strong rally. Which begs the question, okay, is this a good time to buy or sell Philippines? So when we look here at the weekly data point, the MACD, so in terms of the MACD, we can potentially go higher. It's been higher in the past, that's potential. But when you look here at RSI, the last time we had this RSI was back here. This was a great time to short the Philippines. If we go back here, also a pretty good time to short the Philippines. There's been some instances back here in 2017, and you go back here also to 2015, where RSI was higher. But in terms of weekly RSI, and also here at the PPOs, which measures distance between price and various moving averages, we are definitively on the high end of the spectrum. Could go higher, but this is getting risky for the bulls. Looking at daily data points, we have a very clear ceiling here on MACD. Also here on accumulation distribution, it shows a bearish divergence between price and volume. So yes, we have gone substantially higher, but it hasn't been due to like a massive influx of buyers. Looking at RSI, also very dangerous signal. We had the same RSI, daily RSI here. Didn't like cause a crash, but from the high here to the low, I mean, like approaching 6%. And also here with the MACD, the 20 daily PPO the PPO, yeah, 20-day PPO here in purple. It's just really high. So in this case, on Philippines, I write RSI and PPO resistance. Okay, we have it both on the dailies and the weeklies. I will give the bears a pretty solid 7 on the technicals. Of course, it could go higher. It's just that this is just dangerous here for the bulls. Next, we look at the seasonality here for Philippines. So to the left, we do see that from late December into January, you usually see substantial weakness, seasonal weakness from Philippines, but in this case, we have had strength. But that's potentially a bit dangerous, because when there is a primary trend and you have a counter trend, then it begs the question, maybe the typical behavior of the security will come back. In that case, we are due weakness for Philippines. When we look here to the right, on January, current month, 11% gain, which is the best January ever for Philippines. Which also means maybe we shouldn't, based on the data here at hand, we shouldn't expect more strength for January. There's no data point here that suggests that we should expect more. Looking at February and also March, the following months, when we go back here to 2014, February has been more bearish than bullish. 2014 was very good, but we are at 11% now for January. So yeah, it's been a lot already. And March is also a very risky month. It can be very good, like it was in 2016 with a 12-ish% gain, but it can also be atrocious, like in 2020. So it's the seasonality here is problematic. So given that we have this disturbance in the force on the seasonality, extremely bullish performance so far for January, I think there's good reason to expect potential weakness. I will give the bears here a -4. It's a bit messy here with the seasonality being disturbed, but I don't think it makes any sense to expect like a roar higher at this point. Let's look at the fundamentals. The Philippines compared against the VPL, which is the Pacific ETF, Asia Pacific Equities. Looking at performance over the last year, -6% for Philippines, -8.6 for the broader Asia. Beta is much lower for Philippines, 0.6 versus 0.75, PE 24.45. But then all of a sudden, there's way more value in VPL, 11.5 peer price earnings. So yeah, the yield is 2.35% for the Pacific ETF and 0.87 for Philippines. So yeah, those who are into fundamentals, they will lean in favor of VPL. Way more diversification, of course, in the VPL. Dominated by finance, both of them. Philippines is seriously dominated by finance. Some like finance being a bit of a bigger position because it sort of finance has an oversight over the economy. So sort of having a large finance exposure in a country ETF could mean that the ETF to a larger extent is an indicator of the country itself. But yeah, very different opinions on that. Well, let's look a bit here at the country exposure. So to the right here, I don't think you get Philippines. Maybe it's in the others, but yeah. As I do think that the king here for the people who are into fundamentals is better yield and way lower PE for the VPL. So this one also actually go here to the bears. Then again, the beta was a bit lower for Philippines. Yeah, I think I will give this 1.5 here to the bears. Next, we look at relative performance. Long term, comparing Philippines against the S&P 500/America, 0.59% positive correlation. We have 81% positive with VPL, and we have 51 where with China, the FXI ETF. Looking at daily data points, 67% with S&P 500, 89% with VPL, 62% with China. So yes, what happens with the VPL is going to have the biggest effect on the Philippines ETF. So here with the VPL, we also see this inverse head and shoulders. This one is more textbook. Yeah, we had a deeper right shoulder in this case, which means that people were more ecstatic to buy the Philippines than the broader Pacific ETF. Looking here at the RSI, PPO, not like super dangerous territory yet, but on the daily data points, we are really pushing it, Also here with the MACD, so we do have overbought signals here on the VPL as well. So let's now compare the Philippines ETF against the VPL, like that. Start with the weeklies. Okay, so we do have a bit of a rounding bottom formation here, which it is potentially a bit of a bullish pattern. Well, it is bullish. It's a sign of a longer term reversal, especially given that it happens here on the weekly data points. So long term, that could mean Philippines will outperform broader Asia Pacific. Looking here at the daily data points, we recently tested the upper end here of RSI. The previous time we did that, we did see almost a visit of the low end of RSI, and we also saw, substantial underperformance temporary from Philippines. Here also the last time we get overbought, test again, so 2 tests and then a retest of the lows. So based on the history here of what happens with these RSI signals, there is a risk here that Philippines will explore the lower region of RSI, which means that it will underperform the broader Pacific ETF. Looking at the seasonality here, could be a bit more weakness. 4% so far for January. Outperformed more, frankly, in the past. But you can see here that February and March and also, frankly, April are relatively weak months here for Philippines. So I do think I will give this one also to the Bears. I think I will give a -5 here to the Bears. So we do end up with -5.3 in favor of the Bears. The key signal is that we are very much overbought. RSI and PPO sending pretty clear signals. So we do have some time left. I guess it would be a bit interesting to look at the top components of the Philippines ETF. So the first there is SM Prime Holdings. Definitively, we are testing resistance. So let me draw it in. So this is definitively a major battleground for this stock. So let's actually do some measurements here. So how far do we have to go to break out? Yeah, that would be 14%. But you could argue here that the easy gains for SM Prime Holdings has been made. The next battle is going to be tough. And this is the #1 holding. Let's quickly look a bit here at the seasonality. So 8% so far for January in 2023, which is on the higher end of the spectrum. Looking at the seasonality here to the left, could be some weakness on the horizon, but initially some strength is expected. I really wonder whether we will get any kind of price projections from the forecast indicator. Yeah, 0.25% yield, not exactly amazing yield. 11 analysts have a 1-year price target. They are feeling bullish. Average price target is 10% above us, but that actually would not be a new all-time high. So that's interesting. When we look here at price to sales, price to earnings, price to book, we could go a bit higher until before we get into trouble, but the easy gains for SM Prime Holdings have been made. Here is #2, BDO Unibank. Definitively sounds very much like a financial sector stock. Very strong rally, which makes me want to look at RSI. Yeah, it's a bit of a dangerous move here on RSI and PPO on the weeklies. On the dailies, really pushing it. Really pushing it here. Seasonally, we could expect more strength into early February, but for 2023, we are at a almost 16% gain, which is the best January ever. Well, not ever, but at least going back here to 2005. So basically, there's very little reason based on the history to expect more for BDO Unibank. Looking here at price to book, we are at resistance. The previous time we had this price to book ratio here in early February 2022, we did see a protracted correction. Also, price to sales is very high. So we have looked at the Philippines ETF and we have looked at the two top holdings in the ETF. And I think that at this point, there is very good reason to expect some pullback, some weakness in Philippines, which means that the probability of bearish trades working out is higher than bullish. To get additional intel, you just go to diamondarm.com and you can subscribe to the newsletter and, of course, also get the VIP access program.